Well, it's a 100-point knockdown on the SGX Nifty this morning, 130 points to be precise, but plenty of stocks to talk about. IndusInd Bank came out with a good set of numbers. Abhishek is here to give us the fine print. Abhishek, over to you.
Well, it's a record quarter for IndusInd Bank across many parameters. It's perhaps the only bank to give a continuous 8-quarter in terms of YOY and quarter-on-quarter operating profit growth. The net interest margin is at 9-quarter high of 4.24%. The return ratios, both the ROA and ROE, are perhaps the best in last 11 quarters, with ROA at 1.8% and ROE around 14.5%. So YOY, the loan growth is best in 11 quarters, and quarter-on-quarter, the loan growth is also one of the best in last 2 to 3 years. So NII growth is robust on account of better yield that they have got on their loan book. Slippage ratio is slippages overall are one of the lowest in last 8 quarters and second lowest in last 12 quarters. So gross NPA ratio has come down to 2.11%, perhaps the lowest that you are seeing in last 3.5 years. So both in terms of NII and PAT, they are a beat on our poll. Back to you.
All right, Abhishek, thanks a lot for that. Well, let's hop across to Vahista. Vahista, I would like to hear what the Havells management has to say, but these numbers look disappointing, isn't it?
That's right, Nigel. The numbers are disappointing. It's another weak quarter for Havells India. There was a sharp margin decline with a miss on the CNBC-TV18 poll. The margin estimates were at 10.9%, which is anyways lower than 13.8%, which was clocked in the same quarter of last year. But the actual margins have come in at 7.8%. versus the estimates of 10.9%. The company says that the margins were impacted owing to the full absorption of high-cost inventory against the falling raw material prices in this quarter. But the silver lining, however, is that the margins are expected to improve Q3 of FY23 onwards. Also, the company has mentioned that the consumer demand is sluggish at present. The electrical consumer durables revenues were impacted due to short-term destocking in fans, which was led by changes in energy efficiency norms. Also, Lloyd's contribution has turned negative, with EBIT margins dropping to negative 20%. Expect the stock to be in red today.
Okay, thanks for that. So it's a weak quarter for Havells, but let's get back to financials. AU Small Finance Bank and Home First Finance on our radar. Abhishek, how did the numbers look?
Both the numbers were really good, especially on the business momentum. Coming on to AU Small Finance Bank, the net interest margin has expanded by 30 basis points on account of two key reasons. One is that they demanded on yield, which was pretty strong sequentially, and also the fact that CASA ratio jumped up by 346 basis points quarter on quarter, which aided their cost of funds. So AM growth was around 38% YOY and about 4.5% sequentially. Slippages, they remained under control with the annualized slippage ratio of just a little more than 2%. Asset quality has improved and restructured book has also declined to 1.7% versus 2.1% in the previous quarter. Both in terms of NII and PAT, they are a beat on our poll. Home First Finance, the customer acquisition was pretty strong this time around, which aided the overall business momentum. So customer base grew by 5.74% sequentially. The disbursements were up 36% YOY and about more than 6% sequentially. AM growth was pretty robust, growing at 35.9% YOY and about 7.6% quarter on quarter. They have been able to improvise on their net interest margin, which is jumped up to 6.5% when compared to 5.2% on a YOY basis and about 6.4% on a sequential basis. Asset quality has also improved as gross NPA ratio is down about 20-30 basis points on a sequential basis. Back to you.
Thanks a lot for that, Abhishek. We'll get chatting with the management of Home First Finance in just a bit. But for the time being, let's get in Reema to tell us about a mid-cap IT company, Persistent. Reema, looked good, eh?
It does. It's a beat on the revenue and margins. Persistent numbers have come in pretty strong. Dollar revenue growth at 5.8%. This has been aided by about 80 to 100 basis points on the back of acquisition. Margin expansion has come in as a surprise. The street was anticipating margins to decline due to the wage hike impact, but margins for the company have increased by 30 basis points, up for the 10th consecutive quarter. Deal wins is slightly lower on a quarter-on-quarter basis, but attrition is ticking lower for the third straight quarter. All in all, it's a good set from Persistent. Back to you.
All right, Reema, thanks very much. Lupin should be in focus as well. Ekta's got more there. Ekta.
Thanks. Well, definitely negative news for Lupin this morning because they've received 17 observations from the US FDA for their biotech manufacturing facility or biotech facility in Pune. So that might weigh on the stock, but they did announce early this morning that they are acquiring 2 inhalation brands for around $75 million in the US market. So maybe that could negate a little bit of pain, but nonetheless, 17 observations is something which is quite stark, and the street is probably not going to like it on an overall basis. So I expect the stock to be in the red, maybe some upside on account of acquisition of those 2 inhalation brands.
Okay, thanks a lot, Ekta, for that. Well, let's find out how Naveen Fluorine did this quarter around. Sonal has the data for us. Sonal, over to you.
Good morning, Sonia. It was a top-down miss as far as Naveen Fluorine is concerned. Yes, revenue growth of 13%, but it was way lower than what the street was working with at 440 crore rupees. EBITDA up 8% and 90 crores versus an estimate of 116 crore rupees. Margins actually fell this quarter to 24.6%. Profits were up just 3%. Well, it is the higher raw material costs which impacted companies' margins this time around, and it is higher depreciation and interest costs which actually impacted the profit growth for the company as well, which was just 3%. Specialty chemicals did well, where revenues grew by 46%. HPP business, where revenues were up 71%, but the CDMO business was really weak, where revenues declined 53% on a YY basis. The conference call is at 11 a.m., so we'll get more details. But for starters, expect the stock to be in the red today.
All right. Thanks very much, Sonal, for that. Metro Brands, Mangalam is standing by with more on that one. Mangalam, hi.
Well, they reported numbers, good numbers year on year, 47% jump in their revenues, 52% jump in their EBITDA and 50% jump in their net profit. And that's primarily because it was a low favorable base. But quarter on quarter, there has been a decline of 6% in their revenues, a 19% cut in their EBITDA. And as a result of which, over the first quarter, we've seen a decline of 27% in their profits. But, you know, the street will like the acquisition that they've made. They've gone ahead and acquired a listed company, Crevatex Brands, for about 202 crores in cash. So to that extent, we'll be watching that stock as well, because it's a listed company with 98 crore market cap. They import, sell and retail brands Fila as well as Proline. Fila is a strong brand which Metro can actually scale up. Crevatex's last couple of years revenues were between 100 and 150 odd crores, which they got the company for 202 crores. If they can scale it up, you know, the street is something, the street will like the potential of this, and that is something they will watch more than the results this time around, see some green on this acquisition.
Okay, all right. Mangalam, thanks for that. Well, going back to Surbhi. Surbhi, tell us about Max Finance.
Max Life numbers were strong on the margin front but muted on the growth front. Q2 VNB margins came in at an all-time high, up 210 basis points at 31.3%. This was likely because of a favorable product mix. The share of ULIP products was lower this time around. The APE was down 7% sequentially, which was in line with our estimates. Solvency came in at 1.96 versus 2.1 same time last year, so that's a little bit of a concern. But the key thing to watch out for this stock is going to be the management commentary on the progress of the next leg of the Max Axis transaction. So the con call is at 9 a.m. today, so we will keep an eye out for that today. But overall, good numbers from Max Life.
Okay, good numbers from Max Life, but are people shopping more? We definitely think so. One step into Shopper's Stop and perhaps you'll know. Mangalam, tell us, how did it look?
Well, the numbers suggest that people are indeed shopping more, not just in the festive season, but in the season before that as well. 57% jump in their revenues, EBITDA more than doubling, 128% jump out there, and on a low base, the net profit also, you know, or rather the bottom line turned into profit as against a loss of 3.5 odd crores. Quarter on quarter, there's been a jump of almost 7% in the revenues as well, though the EBITDA has not grown as much because of high input inflation. The other internals, they are extremely strong. Footfalls of nearly 4.1 crore people. This compares with pre-COVID levels of nearly 3 crore people. Beauty products selling 45%, their private label selling around 76% higher, and 6 stores will be opened in the third quarter. So these are things that will keep the stock afloat in today's trading session.
Okay, all right, Mangalam, thanks for that. Well, let's do a quick recap then of all the top stocks that we just covered for you. Stocks with positive news flow include IndusInd Bank, AU Small Finance Bank, Home First Finance, Persistent Systems, Metro Brands, Max Financial Services, as well as Shopper's Stop. While stocks with negative news flow include Havells, Lupin, as well as Naveen Fluorine.
Okay, that's the list of top 10 stocks. But let's get a quick handle on what's happening in the world of commodities and currencies, because that seems to be dominating mind space. First on